Hi guys, I haven't done a video for 2 weeks actually because my not my computer but Safari my browser was infected with adware and I simply couldn't do anything. You know, every time I tried to load this page was actually redirecting somewhere else. So I tried many, how do you call this, ad blockers. Nothing worked. Finally I managed to find one, which, so if you're really interested, is this um, malware bytes anti-malware. This is for it's actually for both Mac and Windows. For Mac it's free. I think for Windows it's a little bit more expensive, like a couple of bucks, not so much, I think. So anyway, that's the reason I haven't done any video recently. So let's go back to see what really happened. So the last time I think we're here somewhere. All right. So we had a very big week on the upside now, and this week pretty much was finished. Uh, was a flat week. You know. Again, we have this ceiling here. You know, around 2100, or I can go actually to the all-time highs in here, you know, 2140, say. So the market doesn't manage to move either way, okay, either up or down. It's somehow stuck in this range. It's a huge range, okay, 1800 to 2100, 300 point. That's a lot, right? However, we need to see either a break about to break through about this level, or something on the downside. Okay, so again, you can notice this from the fact that this very long moving average is actually give a mixed signal. So this is really unusual. If you look back, if you put this to moving averages and look back in the last 20 or 30 years, you never see this. So once it's on the this give a crossing on the downside, that's it. It's a bear market. Once cross on the upside, it's a bull market. So no question about it. This time, it's we have a very big whipsaw in here. Okay. So even if you look, I mean, let's look at 2 hours. Then it started to look like another leg down. Okay, in here. Now it's back. So even this is the intermediate time frame. Okay, even the intermediate time frame, it's neutral. Okay, it doesn't go anywhere. Not only the long term. Okay, so pretty much everyone who tries to make money right now are just speculating. Okay, so you'll never know from one day to the other what happens. So the problem is, I think I'm trying to find some reasoning, like at the fundamental level. Okay, I'm not very good at that, I must admit, you know, but I try to figure out why this happened, you know. So remember in December, I guess it was, when the Fed raised the interest rate. Okay, so and the market. So the market didn't believe it was a good things to do, and I think when we saw in general a big move on the downside. Okay, that was one reason. Another reason was actually China. They everybody find out that they cook the books, you know. So the things in China were worse than the government let other people know. So these two reasons. But think about it this way, okay? So the reason the Feds rise the rates is because the economy is doing great, okay, and can absorb this. So the market and the economy by itself can absorb this a little increase, okay. On the downside, it's exactly the opposite. When you see the market moving down, the economy, then you lower the rates to stimulate it, okay. So the signal from this point of view, okay, the signal will be the following. So they increase the moving rate. That means they know they're the ones who know exactly what is going on. So they know that things are going well. Okay, and then somehow that was sounded like a bluff to me, and the people the Wall Street called that bluff in January. Okay, so after this increase, they were talking about a further increase. Then somehow you heard about going the opposite way, not only stopping any increase in interest rate, but going to negative rates. Okay. Now, once again, they change the story and they don't go to the negative rates, but in top of whatever we have now, which is very little, a little bit above zero, they want to increase a little bit more. So no wonder the market doesn't really know what actually is what is going on in there. Okay, so if you have other explanations, I'm really curious to hear. That's my perspective. That's my way I'm thinking why this happened. So pretty much, if we look to try to guess, well, actually, will be really a guess at this point to see where the market will go next. Absolutely, I have no idea at this point because. Um, when it's a clear sign on the upside and on the downside, okay, here was very easy to call this. Even this downtrend once started. Okay, so from here on was clear. From here on was clear. Was on the upside. Okay, at this point I have absolutely no idea more than from one day to the other. Okay, so if I want to make some money, I'm doing intraday. Or I keep it for a few days and that's it. Okay, so but actually I don't bother too much with this because it's time consuming and I tend to get very nervous if I act in such a short term because it's a lot of guessing in there. Okay, so I played a little bit. I show you which I play. I usually play with X. These are has very huge moves on the upside and on the downside. So this is even intraday. You can take advantage of these big swings on the upside and on the downside. So this is weekly. Okay, let me show you on a much shorter time frame. Okay, 2 hours. So pretty much it had here. In March started a huge move up from 650 say to 20. I mean this is a huge percentage wise, is huge. Then a huge drop and now it looks like again. But again, I didn't took advantage of everything. I was too nervous, so I keep it a few days, exit, keep it a few days, exit. So most of it I was successful. I made some money, but I'm playing only for with a little amount. Okay, so just in case I'm gonna be wrong. Okay, now let's look a little bit the others. uh, if you look at Dow actually was down a little bit this week, but again the same picture, nothing going nowhere. Nasdaq is not in a better position than this. Again, absolutely no direction. So, well, at least this one didn't give the sell signal from my point of view. It's my method. But anyway, it's anyone guess what will happen next in here. Okay, even gold, which seems to work pretty well, lately, and had a as long as he went after outside of this trading range, I saw I expected a very big move on the upside. Even that actually it had a couple of weeks which lost a lot of points from 123 to 115, and now it's a little bit back to 118. But let me change a little bit here because I know for me it's a little bit distracting. So let's look at this. Um, so you see, um, this one actually again, I still have a bullish bias in here, but it's not as bullish as I was somewhere in here, when they look clearly okay. Even if it was straight up, then a little bit on that, but then make another higher high. Now looks he makes slightly below this low in here. I'm not sure anymore. Okay, obviously silver is in the same situation. um, Oil, well, again went a little bit down. uh, this one it's really damaged the trend. I mean I cannot call the trend, not anyway, not on a weekly chart. This is too long. Maybe if I go to 2 hours, then It was obviously in a uptrend in here, okay, huge downtrend. This again a little bit swing, but now it's a little bit again in the slight uptrend. But it may go. Look, the moving averages are flattening here, so you never know. So right now, the best advice is stay out of the market. Absolutely no, nothing. All my money on my 401k are parked in bond, FGMNX. Okay, so it barely goes up, barely goes up. No big deal. I'm not making a lot of money, but I want to be protected on the downside, because if it goes down, this will barely go down, even, or maybe even go up. I'm not. Again, bonds are a little more difficult for me to understand. But if you look at 2007, look in here. 2007 was here, okay. So the end of 2007 was here, okay. Just October. That was the beginning of the bear market, pretty much. That was the highest high, around 1500, 50 and S&P. So from here to 2009 again, actually went up a little bit. Doesn't matter. From what is here, 8, let's say, to 850. You gain a little bit, but most important, you didn't lose 50% of when the market went down, like 50%. Okay, at least on Dow. But actually, no, on S&P it was the same. Okay, 1550 to 666. Actually, more than that. Okay. So this is one. This is the fund which I'm always got. Instead of keeping on a money account, which doesn't produce anything, I prefer to keep it in a very high quality fund, bond fund. Okay, there are other junk bonds. You're taking huge risk. I mean, I don't really understand why people bother with junk bonds. You go directly to the stocks if you want to risk. Okay, it doesn't matter, because a junk bond fund will actually go down with the market. Okay, so here actually was redistribution. If you look at this, like a bit of quite a dramatic, but here they give a lot of money. They like dividends. Okay, I don't know why they did this. Okay, and so pretty much was like straight line. Okay, so just want to keep in mind. I'm sure the PRCREF or Vanguard, they have something similar if you prefer them instead of Fidelity funds. So that's the conclusion for this week. Pretty much, I'm everybody is expecting for something to happen, something major. I haven't checked the volume, but I bet it was very low, because people don't want to risk. So Wall Street, it's risk adverse. They want to make money, to be sure when they go either up or down. That's obviously, it's obvious that. Okay, so actually we, the ordinary guys, take more risk than them. Okay. So I'll stop here. Hopefully next week will bring some clarification. Okay. Okay, guys. Goodbye, and see you next week.